Welcome to Recording Transactions in T Accounts, Part 2. Remember, the big idea behind this unit is that everything we do in accounting is based on the accounting equation, assets equals liability plus owner's equity. This equation must always be in balance. Therefore, the entries that we place into the accounting system must be equal but opposite entries. And that's what we mean by double entry accounting. So let's review what we did last lesson, because repetition is important for true learning to take place so that our learning can become automatic. The learning outcomes that are associated with this unit are that we need to be able to, at the end of the unit, you need to be able to record transactions in T accounts, and you need to be able to prepare a trial balance to prove the accuracy of the ledger. Recording transactions in T accounts involves three things. First of all, recording the opening balances, which is what we did last class, and then posting the transactions, which is what we're going to do this class, and then balancing the T accounts, which is what we will do next class. So today what we're looking at is how to record transactions in these T accounts. What we learned last class is that T accounts are not really part of the accounting records, the formal accounting records of the business. It's just a rough work analysis tool. It's called a T account because it's shaped like a T with the account name at the top, and then the account divided into a left side and a right side. The left known as the debit, the right known as the credit. Increases happen on one side and the decreases are happening on the opposite side. So which accounts are opening balances, which sides are opening balances recorded on? Well, our assets, drawings and expenses have their opening balances recorded on the left or the debit side, and our liabilities, revenue and capital have these account balances recorded on the credit side. And we use the acronym AID-LIRC to help us remember. ADE, that grouping, has their balances on the debit side, and LIRC has their balances on the credit side. So we're going to use that now when it comes to posting accounts to the ledger. But something else we looked at last class was the steps to opening accounts. Or opening ledger accounts. The first step is we enter the account name on the top bar in the center, capitalized, and the second step is to record the date and the opening balance amount on the correct side. So for our AID accounts, assets, drawings and expenses, that's going to all be on the debit side, and then for our LIRC accounts, the balances will be on the credit side. So cash is an asset account, making it part of AID. That's why its opening balance was recorded on the left side in this example. So today we're going to take a look at how do we record transactions to go with those opening balances in our accounts. The way the T account is laid out never changes. Debit is always on the left and credit is always on the right. So whether we're looking at AID accounts or LIRC accounts, the debit will always be on the left and the credit will always be on the right. What does change is the side of the account that increases and shows the balance. So for AID accounts, our opening balance is recorded on the debit side, and that's also the side on which we will show increases for AID accounts. So assets, drawings and expenses will increase on the debit side, which means that they will decrease on the credit. Then our LIRC accounts are the opposite. They have their balances recorded on the credit, and any increases that need to be recorded in those accounts are also recorded on the credit side. which means that decreases would be on the opposite side, on the debit side. So we can see what's most important is to know for both of these types of accounts, what side does the opening balance go on, because that's the side that increases will happen on, and the decreases always just happen on the opposite side. So, what are the steps for recording transactions in accounts? The steps that are followed in analyzing transactions and recording them in accounts are as follows. First of all, when we read the transaction, we need to determine which accounts need to change as a result of that transaction. And because we're using double entry accounting, there must be at least 2 accounts that change. Sometimes there can be more than 2, but they can never be less than 2. Otherwise, we won't be doing double entry accounting. The second step is to identify the type of accounts that are going to be changed. Are they aid accounts or are they lurk accounts? Step 3, now that we know whether it's aid or lurk accounts, are these accounts increasing or decreasing? And then using our aid lurk acronym, we then decide whether the transaction needs to be recorded on the left or the debit side or on the right on the credit side. But we need to always keep in mind that when we've done recording both sides of that transaction, there should be one entry on the debit side in an account somewhere and another entry on the credit side in another account somewhere. Otherwise, we're not using double entry accounting and the accounts aren't going to balance. So let's look at an example together. We're going to look at an example that's actually in page 47 in your textbook if you want to follow along there. Otherwise, you can take some notes. So there's our aid lurk acronym at the top there, just to remind us. Our aid accounts, assets, drawings, and expenses, going to increase on the left, decrease on the right. And our lurk accounts, liabilities, revenue, and capital, are going to increase on the right and decrease on the left. So our first transaction that we have here is from August the 2nd. We received $500 cash as payments on account from patients. So we received $500 cash. What's the reason we received the cash? Patients paid their accounts. So step 1, we've got to decide what are the 2 accounts involved. So we're receiving cash, so we know cash is one of the accounts involved. What is the reason? People are paying their accounts. Our patients, our customers are paying their accounts. So the other account involved must be accounts receivable. So those are the 2 accounts involved. Now we need to decide for each account what's happening to it. What's happening to the cash account? We received cash, so cash is increasing. Cash is an asset, it's increasing, and then our accounts receivable is also an asset. But if patients are paying their accounts, that means that their accounts receivable is decreasing. They're owing us less money. So if we have to record this in the T account, each cash and accounts receivable, the entries there in black, that's their opening balances that were previously recorded. You'll see both their opening balances are on the left side because they're both asset accounts. And then the transaction on August the 2nd, the $500, is increasing our cash asset account because we received $500 cash, so we record that on the left. But the fact that our patients are paying us means that our accounts receivables is becoming less. The amount of money that patients owe us is reducing. So that's why we're going to record that on the credit side because accounts receivable is an asset that is going down, and assets decrease on the credit side. Let's look at transaction 2. On the 5th of August, we purchased $25 worth of office supplies from Central Supply Company with 30 days to pay. Purchased $25 worth of office supplies from Central Supply Company with 30 days to pay. So what are the accounts involved here? What is happening in this exchange? We're gaining office supplies, but we haven't paid cash. They told us we have 30 days to pay. So the other part of the transaction is accounts payable because we owe somebody money. So those are the two T accounts that we need to record this transaction in. Office supplies is an asset. Its balance is on the opening balance that was previously there. It was on the debit side. Accounts payable is a liability. Its opening balance is on the credit. So when we buy office supplies, our office supplies asset is increasing. That's why we record that transaction on the debit side. And when we're buying office supplies and we're not paying, then accounts payable, our liabilities, is increasing, which is why we record the $25 on the credit side of accounts payable. And you'll notice that once we've done recording this transaction on August the 5th, that $25 appears once in an account on the debit side and then once in an account on the credit side. So our debits and credits are equal to each other. We've recorded this transaction in the T accounts correctly. Transaction 3. On August the 5th, we paid $705 cash, now due to Equipment Unlimited for goods previously purchased but not paid for. Paid $705 cash, now due to Equipment Unlimited for goods previously purchased but not paid for. So, what are the accounts involved? Well, we've paid cash, so we know our cash account is involved. What did we pay for? We paid Equipment Unlimited for goods previously purchased. So this is Equipment Unlimited is a liability. It's an accounts payable liability. So the accounts payable will be our other account involved. So what we're going to be recording here, cash. If you have a look at the cash T account, previously on July 31st, there was an opening balance. On August 2nd, we entered a transaction regarding where we received cash. And now on August 5th, because we paid cash, our cash asset is actually going down. So that's why we have to record that transaction on the right of our cash account. Our accounts payable account is also going down because we are paying Equipment Unlimited. So now we're owing them less money. So the other part of the transaction is recorded on the left. So for convenience, all entries that were originally in the accounts are shown there in black, and then blue is the new transaction that's been recorded. So you can see that our debit in accounts payable is equal to our credit in cash of $705. So we have met the requirements of double entry accounting. Let's take a look at transaction number 4. On August the 7th, we purchased 3 new anatomical models for $545 each, for a total of $1,635. So what's important here is that we bought equipment totaling $1,635. So our equipment is going up. Now let's have a look and see how did we pay for this. First of all, we made a cash down payment of $535. So that means our cash is going down. We didn't pay for everything. So the remaining amount of $1,100 is to be paid at a later date. So our accounts payable is going up by $1,100. So that here is an example of where we have more than two T accounts. So our physiotherapy equipment is increasing on the debit side by $1,635. Our cash asset is decreasing on the credit side by the amount of cash that we paid, $535. And then our accounts payable is also increasing. Our liability is increasing on the right or the credit by the amount that we have not yet paid, the $1,100. So if you look carefully, you can see even though we've split this transaction over 3 accounts, we're still complying with the double entry system because we have debits totaling $1,635 and it's equal to our credits. 535 plus 1,100 is also 1,635. And then our last transaction, the owner invested an additional $5,000 cash into the business. So when we see the owner invested, we know capital is one of the accounts. What did he invest? Cash. So cash is going to be the other account. So our cash is going up. The business's cash is going up because the owner is giving more cash to the business. Our cash asset increases on the left or the debit. And the owner's capital is also increasing because he's investing more money in the business. So his equity in the business is going up. And that happens on the credit side by $5,000. So once again, our debits equal our credits. So that's how we post transactions to the ledger. So what we need to do now, in order for this to become really, really easy and automatic, we need lots and lots of practice. So these 3 exercises in your accounting textbooks will help you. They should not take you too long, but the repetition will be really good for you and help this to become totally automatic.